Building products maker Boral is paying a heavy price for its exposure to the US housing market. It's reported a full-year loss after write-downs in the value of some underperforming businesses. Revenue is down and the company is warning the outlook for the coming year is mixed. Andrew Robertson reports.
Construction is a cyclical industry and the cycle is working against the industry at the moment. It's reflected in Boral's results.
I think the result was fairly mixed. I think the Australian building materials business was quite a good result. That was boosted by government stimulus in housing and in education. But the rest of the businesses, I think the result was pretty weak.
That weakness led to more than $200 million in write-downs, which saw Boral record a full-year loss of $91 million. Excluding those write-downs, profit after tax was virtually unchanged from last year. Revenue was down 6% to $4.6 billion. In the key United States market, though, sales plunged 33% and were the major drag on earnings.
We lost $100 million in the US during the course of last year. Housing starts are now running at about 530,000 per year, and that's against a 50-year average of 1.5 million.
Boral has been selling non-core businesses and has raised $500 million in new equity as it positions itself to take advantage of the recovery in the building industry whenever that occurs. Mark Selway doesn't rule out a major acquisition.
We've got $1 billion of unutilised facilities. Our gearing's only 25%, so we could do something quite sizable as an organisation.
Deutsche Bank analyst Emily Benke believes opportunities in Australia will be limited and says the success of overseas purchases will depend on price and timing.
At the moment, I think that it's possibly a little bit too early. However, we don't know what's around the corner. If the US economy turns around very swiftly, then acquisition prices are going to increase.
Having said that, though, Emily Benke is not surprised Boral is looking to spend.
A lot of companies, including Boral, when the GFC happened, took a knife to their capital expenditure, and as a result, some of the businesses have been underinvested in.
Mark Selway has been running Boral for 8 months and in that time has restructured the company and made a major attack on costs. Constellation Capital's Richard Morris says the jury is still out on whether that strategy will pay off.
The underlying businesses are pretty well known by the market, but it's what management do with those businesses and where they take the company. I think that's the unknown at the moment.
What we do know is that Boral has lifted its final dividend to 6.5 cents a share, giving a full-year payout of 13.5 cents.